Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today we're going to explore one of the most important metrics in finance, EBITDA. So what is EBITDA? Simply put, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of a company's profitability that excludes non-operational items like interest payments, taxes, and accounting adjustments. Think of it as a snapshot of a company's core business performance, without the noise of external factors. To understand why EBITDA is important, let's take a step back in history. The concept of EBITDA emerged in the 1980s, when companies like Michael Milken's Drexel Burnham Lambert began using it to evaluate potential takeover targets. By focusing on a company's underlying profitability, investors could get a clearer picture of its true value, beyond just its net income. At its heart, EBITDA is a measure of a company's operating cash flow, minus non-cash items like depreciation and amortization. It's calculated by adding back interest payments, taxes, depreciation, and amortization to net income. This gives you a sense of how much cash the business is generating from its core operation. One influential thinker who helped popularize EBITDA is Joel Greenblatt, a renowned value investor and author of The Little Book of Value Investing. Greenblatt argues that EBITDA is a more reliable metric than net income, as it's less susceptible to accounting manipulations. By focusing on EBITDA, investors can get a clearer picture of a company's true earnings power. Let's look at some real-world examples to illustrate how EBITDA works in practice. Take the case of Amazon, for instance. In 2020, Amazon reported net income of $18.7 billion, but its EBITDA was a whopping $34.4 billion. This discrepancy is due to the fact that Amazon has significant depreciation and amortization expenses related to its investments in technology and infrastructure. Another example is Tesla, which reported a net loss of $862 million in 2020, but had an EBITDA of $2.4 billion. In this case, Tesla's EBITDA gives us a more nuanced view of the company's financial performance, as it excludes non-cash items like stock-based compensation and depreciation. If you're an entrepreneur, understanding EBITDA can help you make better decisions about resource allocation and capital expenditures. By focusing on your company's EBITDA margin, that is, the percentage of revenue that translates into EBITDA, you can identify areas where you can improve efficiency and boost profitability. For investors, EBITDA can be a powerful tool for evaluating potential investments. By comparing a company's EBITDA to its enterprise value, you can get a sense of whether the business is undervalued or overvalued. Just remember to consider other metrics, like cash flow and return on equity, to get a complete picture. In terms of challenges, one common pitfall is to rely too heavily on EBITDA without considering other metrics. Another challenge is to use EBITDA as a sole metric for evaluating companies with different business models or industries. For example, a company with high research and development expenses may report lower EBITDA margins, but this doesn't necessarily mean it's less profitable in the long run. To overcome these challenges, it's essential to use EBITDA in conjunction with other metrics and to consider the specific context of your business or industry. You should also be aware of common pitfalls like manipulating EBITDA through accounting conventions or one-time expenses. By being transparent and consistent in your reporting, you can build trust with investors and stakeholders and make more informed decisions about your business. In conclusion, EBITDA is a powerful tool for understanding a company's financial performance and potential for growth. By excluding non-operational items like interest payments, taxes, depreciation, and amortization, we can get a clearer picture of the business's ability to generate cash from its core operation. Whether you're an entrepreneur, investor, or simply looking to understand the world of business better, EBITDA is an essential metric to understand and use in your decision-making. If you have any questions or topics you'd like to discuss, please feel free to reach out to me on social media or through our website. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.